how to invest in property if you're just getting started after COVID-19. That's the subject of this video. We're going to go through quite a lot of detail, and I'm going to lay out what type of properties to buy, when is the right time to buy them, and especially how you can get started if you have limited funds available to put into it. That's all coming up. If you're new to this channel, make sure you subscribe and hit the bell icon. We put out new content each and every week. It's all dedicated to helping you be more successful in property. And if you like this video, do smash that like button. It really helps us out on YouTube. My name is Ranjan Bhattacharya. I've been an investor and developer of properties for the last 30 years. Over that time, I've helped hundreds of property investors transform their lives and take their property businesses to the next level. Now, in my 30-year career, the best property deals I've ever done have been in times of disorder and disruption. And in this video, I'm going to share with you, if you get the 5 Ds of sourcing great property deals in alignment, then now is always a great time to buy. Now, this video has been prompted by several questions I get left on this channel. And the theme of all these questions are really about getting started in property, particularly now in the current times and with limited funds available. This one from Wahid Nazari. I'm a first-time buyer. Should I buy now or wait? Any suggestions? Michael Hall is saying, if you had 50k to invest in 2020, what would you do? L. Salib is saying, I have a small deposit. Should I start investing in London as I live in London, or should I go outside of London and all of that? One from Nikki Carr. How feasible is it for new investors to get involved in commercial property right now? Absolutely great questions. But what I'm going to do is kind of do a little bit of an explainer about the situation right now. And then we'll return back to the questions and I'll answer them fully in the context of what I've just explained. If you've got any more things you want me to cover in terms of helping you out on your property journey, then the place to leave your questions is in the comments below. Just put them in there and we'll answer them in a forthcoming video. We're in uncertain times, and you've probably heard people like Warren Buffett talk about how uncertain times are the best times for opportunity. This is a famous Warren Buffett quote: be fearful when others are greedy, be greedy when others are fearful. But what exactly does that all mean for property investors? How do you apply that in the world of property? Well, in the world of property, it's all about getting the right deal. And times of uncertainty are the best time to get the right deal. Now, let me just explain what the right deal is. Now, you've heard this bit before, but there's some bits coming on that you may not have heard of, or you may not have joined the dots of in the way that I'm about to. Now, of course, everyone talks about looking for motivated sellers. I mean, if you're a property investor, you're not going to buy a property at full market value. It's nuts. And the way to find properties below market value is to find motivated sellers. People who are looking for certainty in a sale, people who are looking to sell a property more than they are looking to achieve the optimum price. And when you're looking at motivated sellers, you really are looking for the 3 Ds, if you like, the 3 Ds that determine motivation, the most motivation, if you like. So you get death, obviously probate sales and the like. There's people splitting up, so divorce. And there's also default, which is loan defaults, people having problems keeping up with their mortgage repayments, etc. These are 3 of the most common reasons which make sellers motivated to sell a property quickly. Now, you find these guys in any market, but of course, in terms of uncertainty, you tend to get more defaults in terms of people falling behind with payments. Now, there's another D word when it comes to finding bargain properties, and that's to look for distressed properties. Properties which have something wrong with them. And these can be all sorts of things. Some of the most obvious reasons why a property is in distress and why you will be able to pick it up cheaply are things like it has structural problems. There are a lot of properties, which particularly flats, with leasehold issues or legal and title issues that need resolving. There's some properties where there are planning irregularities. For example, properties may not have the planning permission formally on paper for what it's being used at. I mean, I've got a video, actually I'll put it up here. It actually talks about how you can regularize a planning use if that is the problem. There's also situations where the property is just in disrepair. Nothing's been done to the place for 20, 30 years. I mean, obviously that's not going to go for the same price as a property in A1 condition. Perhaps you've got a very old lease where there's a regulated tenancy or some tenancy that's kind of locked into a particularly low rent, which isn't of market value. That can cause problems as well. And another area which is absolutely key in these times is a property that's not optimized. The space is just badly utilized. You get plenty of these in residential, but increasingly now you're getting so many of these in commercial property. These are situations like with retail property and offices where there are just simply too many of them. And the space can be repurposed to something else which will make a far more optimum use. Optimum use within society and also optimum use in terms of profitability. Now, the double whammy, if you like, in finding below market value is when you actually find a motivated seller who is the owner of a distressed property. You get a deal which covers both these areas, and then that's a double whammy of discount, if you like, to the market value that you'll be paying. Now, you can find distressed properties and motivated sellers in any market at any time in the market cycle. There's one D that doesn't come around too often. Now, I've been investing in property for 30 years, and this final D that I'm going to share with you has only come up 3 times in my property investing career. Now, the final D is what I call times of disorder. And those are times when there's something unusual going on. Typically, we see deep recessions. We see times when there's political uncertainty, like at the time of Brexit, for example. And now, of course, we've got a pandemic. And the thing is, times of disorder are where people are most fearful. People are most uncertain about taking any life-changing decision or investment decision. So when people like Warren Buffett are saying things like be fearful when others are greedy and be greedy when others are fearful, what they're really saying is go for this zone here. You know, at times of disorder, buy distressed properties or distressed assets from motivated sellers. If you combine all those D's together, if you like, you get a treble whammy. And that's why people say the best deals are done in recessions. Now let's take a look at my 30-year property investing career. I got started round about here in 1990. And between 1990 and about 97, these were times where there was a deep economic recession. I mean, here there were motivated sellers, there were distressed properties, and because of the economic recession and interest rates shooting up. I mean, when I started buying property, interest rates had just doubled overnight. And that created a lot of motivated sellers, particularly with distressed properties and the like, and it created a lot of opportunity to buy. Now, the fact of any recession is that it always is followed by a boom. Now, you can't tell exactly how long it will take for that boom to happen, but periods of recession usually create a lot of pent-up demand. Now, the great thing about getting your timing right is that when you buy somewhere like here, you don't have to wait that long to get to somewhere like there. Whereas if you buy at the peak, then you can have a real problem if you're just facing a depression and then waiting probably, more than a decade for you to just come out even. That's typically what happens. And that's why timing is everything. Now, of course, when you're buying into a period like that, you've got a little bit of a problem because without hindsight, you've got no idea whether it's going to be a light fall or how far of a fall you've got left. And that's where the other D's come in. Because if you're already buying something from a motivated seller, so you're getting it at a discount to whatever the market value is currently, you're buying it which is distressed, which offers you some way to add value to the property as well. So those are sort of extra whammies, if you like. They build in a cushion of equity, which mean that if you do buy in this period, even if there is a minor fall, you're shielded by the fact that you've bought well. As far as my property career is concerned, in 1990, I just graduated from university. I didn't really know what I was doing. Did a few deals, some of them turned out right. But it was really at the next big period of disorder, 2009, where I could really have a bit of fun. Because by that time, I'd kind of figured it all out. So between 2009 and 2013, we had a terrific time instigated by the Lehman's crash and the credit crunch, which caused quite a steep recession in the UK. And that created another great fill your boots buying opportunity. And again, this is very, very specific types of property. It's properties which are motivated sellers. It's properties that are in distress, properties that you can add value to because you can increase the optimization on them. And they're bought in times of disorder where fear is gripping the market. And now we're heading for another period as we are in 2020 and heading into 2021, where we're going to see more disorder. I think right now in 2020, we are seeing a little bit of calm before the storm. And I've discussed this in previous videos. We've got the furlough scheme. We're just coming out of Covid-19. We've got to wait and see what happens when that furlough scheme ends and how quickly there is a bounce back in employment in the wider economy. My prediction is that that's going to take 2 to 3 years to bounce back. And during that time, there will be a period of uncertainty and there will be a period of fear. And again, that's disorder. So if you get the disorder, the motivated sellers, the distressed properties all right, and make use of this buying opportunity over the next few years, it won't last. And this is why it won't last, because as soon as the economy starts to bounce back, what we're going to see is a boom. And this is exactly the same thing that happened around about 2013, as the economy began to bounce back and prices went into boom again. So let's put this together in terms of some of the questions that our viewers have raised. Now, if you're getting started in property, you need a bunch of different things. You need some knowledge and experience. Now, fortunately, I've got a bit of experience and I put out a lot of my knowledge on this channel. So make sure you subscribe and hit that bell icon so you're notified when we upload new videos. So you need knowledge, of course. You also need time and you also need money. Now, basically, if you've got no time and no money, then it's a little bit of a challenge getting started in property. But as long as you've got one of either time or money, then you can get the knowledge. You can get the knowledge and get skilled up in what you need to do. But you do need one or the other, time or money. Now let's go back to some of these questions. Wahid Nazari asked, I'm a first-time buyer, should I wait or buy? Any suggestions? Now, by first-time buyer, I'm not really sure whether you mean you are a investor or a homeowner. I'm going to answer both actually in both types of scenarios. Whether you're a homeowner or an investor, the principle is the same. You will get the best deal from looking for all of these, if you like, the distress, properties and motivated sellers at the right time. The optimum time to buy, I think, will be as we get into 2021. But the time is now to get the skill and the knowledge in actually finding motivated sellers and assessing distressed properties. And Michael Hall asked about if you had 50k to invest in property in 2020, what would you do? I would focus my resources, if you like, on finding those distressed properties from motivated sellers. That's pretty much it. I'll put some links and some videos in here with some ideas on how to do that, but just focus on that. What you don't want to be doing is buying property in the standard way. This is the worst time, and over the next few years, it will be the worst time for going to an estate agent and putting down a deposit and buying property at full market value. That's absolutely balmy. It's too risky to do that. The way you mitigate your risk is by making sure you buy at a big discount to start with. And again, that's by motivated sellers, distressed properties, and in times of disorder. El Salib asked, got a small deposit, should I start investing in London or should I go outside where I can get more? Now, this is quite a big one. Now, I've been doing property for 30 years. Let me tell you the truth of the matter, if you like. The real wealth creation in property comes from capital gain. rather than cash flow, monthly rental cash flow. Monthly rental cash flow in high yielding areas is great. It's great for the short term, but what you really want is that massive capital appreciation. Stay tuned. I'll be doing a video shortly where I'll be comparing high yielding, sort of high cash flow type of places up north with areas which are higher value but lower yield but much higher capital appreciation. And you'll see exactly what I mean over a 10-year period. That's coming out soon, so subscribe and bell icon. And we'll let you know when it comes out. Now, don't worry about the small deposit. Remember what I said a little bit earlier. You need time, you need money, you need one of those things to do a great deal. Now, if you have time, I would focus on finding a cracking deal, because a lot of people who have funds simply don't have the time to find these sort of cracking deals. They're expecting to just do things the easy way by just going to the estate agent and paying market value. When you've put in the effort to find properties in distress and motivated sellers, and you've negotiated a cracking deal, then it is very, very straightforward to find people to fund them. Now, many of you know I'm on a show on Sky TV called Property Elevator, which is a bit like Dragon's Den. I'm one of the angels on that show, and people kind of who have found cracking deals pitch their deals for investment on that show. I'll put a link in the description below if you want to apply to get your property deal funded, but you don't have to go on TV to fund your property deal. There are plenty of people who have money that want to invest in property but don't have the time to find the true bargain deals. And my answer to Nikki Carr's question, how feasible is it for almost newbies to get into commercial property right now? It's all about acquiring the skill and the knowledge to do this properly. And what I mean by that, the big skill to acquire is how to find target sites, how to find properties in distress. Now, with commercial property in particular, there are loads of properties in distress and there are loads of very, very motivated sellers. We're entering into a time, what COVID-19 has done has really condensed what was happening over 10 years in commercial property into a matter of 1 year, in that so many things have gone online, so many things are being done remotely. We now have a massive oversupply of offices and shops. Coupled with that, we have a situation where there are a whole number of permitted development rights. I've got some links in the descriptions here that explain what the government is doing to help you repurpose these buildings to more profitable uses without going through the vagaries of planning permission. All you need to do is find those sites. All you need to do, be clued up on, is how to find motivated sellers of distressed commercial properties and know exactly how those properties can be repurposed. How to get started in commercial property is really all in here. It's all about acquiring the knowledge, because as soon as you've got a cracking site, you can get that funded. Now, I've got a link as well to a case study video of one of my students who bought a shop in West Ealing and repurposed it to residential uses. Again, she found the deal using this method that I've talked about in this video, and she found a cracking deal, and this is one that she managed to finance using none of her own money. Watch the video and you can find out how that was done. As we get into 2021, the landscape for commercial property is going to change quite dramatically, and a lot of things are going to come to a head. We have an oversupply of commercial property, particularly retail, and particularly in secondary parades. We will see downward pressure on commercial rents. When that starts to happen, that's going to create a lot of motivated sellers. You see, commercial property is often financed on commercial loans, and commercial loans don't work in the same way as buy-to-let mortgages, mainly in that the lender has the right to insist on revaluations at any time it sees fit, if they feel that the loan to values are falling below what they feel they are comfortable in lending. Now, with commercial property, with straightforward commercial property, the value of the property is dependent on the rental stream income that it produces. So if there's downward pressure on the rent, then the value of that property will fall. And if it's backed by a commercial mortgage, then the commercial lender can ask for a revaluation and basically ask you to stomp up the difference if it determines that the property price has fallen. So this will come into play pretty much next year, and what that's going to mean is that there are going to be lots and lots of motivated sellers out there of commercial properties. The permitted development rights that we already have for repurposing are massive. There are a whole host of these going to be added to just in the next couple of months or so. As we get into October, there'll be even more PD rights for repurposing these commercial buildings. So these distressed vendors with distressed properties won't necessarily have the funds to carry out these permitted development projects. So that will create a ripe buying opportunity. Even if you don't have funds, the thing to get clued up on is how to find these commercial sites, what permitted development rights are available, how can these sites be repurposed more profitably without the need for planning permission. Once you can put the deal together, it is relatively straightforward to find people with money who are time poor, who haven't actually joined all the dots in terms of the ability to source and find these deals and do a JV or joint venture with those individuals. Now, I've tried to cover a lot in this video, and there's really a lot more I could go on for. And I do run some specialist training on this subject where we look at commercial property and commercial property repurposing. We look at the A to Z of how to find commercial sites. We look at how to assess them for permitted development conversion so you can easily repurpose them so that they attain a much higher value, both for rental and asset value. We show you how to fund them, how to fill them with proper tenants, and how to structure the deal in a way that you can do it with the minimum of your own cash funds. If you've got pension funds, we should also show you how you can deploy those effectively into commercial property. If you want more details, I've got the link here, succeedingproperty.com/workshop. If you've got any questions on commercial property or anything else you want to ask, just leave your comments below and I'll do my best to answer them in a forthcoming video. Until next time, folks, bye for now.